When you talk about very high cap rates, let's just think we're talking to folk that are listening to this podcast are used to sub 4, right? Multifamily cap rates. That's probably going up at the moment. What kind of cap rate? We're talking like mid-teen cap rate, mid-teen and higher cap rates. So talk about the numbers of what a farm looks like. Give me some kind of example.
I mean, first of all, ranches here, farms trade by the acre.
Right.
No one thinks about what the return is. I mean, we all think about the return when we're starting to think how much money we can make. But when we talk about buying a ranch from someone, we say, we'll give you $25,000 an acre. We're not going to, we're not saying, well, how about an 8 cap rate? Or, we don't, nothing here works that way. The new investors coming in, the sophisticated investors coming in, they're starting to buy that way a little bit. It's happening, or they're thinking long-term of what the cap rate is and what it could be. That will drive value, the value proposition that we're selling in our program. But, for instance, we did a deal 8 years ago, and we had a fortuitous buy on it, which doesn't really matter, but we had $2 million in the deal, and we didn't make anything for 3 years, and then we made $1 million a year for 3 years. So the cap rate was 100. It was giant. But nobody cares, right? We ended up selling it for a very high number to Prudential. It was part of one of our fund things that we did, and the term of the fund ended after 10 years, and we needed to liquidate. So it was a really happy liquidation day. But it's on a cap rate basis, it's like 30 or something. When you think about making $1 million on something, you're in $1.2 million. It's 100% cap rate, I guess. I never thought about that.
I know that's what I mean. These are just.
But that was a very, very, very fortuitous deal. But there's plenty of. I have a ranch that we bought in 2006, and the numbers are smaller back then. But it didn't matter, right? We were making 50% on the equity each year for the first 3 or 4 years, and it went up from there a little bit. So if you look at today values, it's still a 15 cap rate, right? And this is way more predictable than people think it is.